Hello everyone, good morning, and thanks for joining us this Saturday morning, and welcome to this educational presentation of how to pinpoint your exit levels with range extensions. Now this is a great new feature that we have on our platform, and it automatically will tell you once you get a buy signal or a sell signal where these range extension exit levels are. Now, for example, if we look at this example here in PG, here's an older chart in the stock on our platform, we see that a buy signal was generated right here on this bar, and you'll see how we would have automatically generated an exit level at this point, so you would have known in advance where one of these placements could have been and taken advantage of it. And many times, not guaranteed, but many times, price comes right up to these exit levels before it dissipates and loses a lot of its momentum. Remember, once again, this is a brand new feature that we have on our platform, the PTS Primo Charting platform that I developed with Pro Trader Strategies. It is the educational portal that automatically generates exit levels for you. So I'm going to go into detail and explain just how simple it is to apply these new features on our platform. So welcome once again. Thanks for joining us this Saturday morning. My name is Steven Primo. I am the president and founder of Specialist Trading. And 9 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate you as traders. We feel that's the reason why most traders fail. It's been estimated upwards of 80 to even 85%. And that's because most traders don't have the education. They lack the tools and techniques and education to make their own trading decisions. So you rely on someone or something else, someone in a chat room, some trading guru, or some system to tell you how to trade. And if that works so well, then once again, why do 80% of all traders fail? It's because there's no consistency in that. And most importantly, you're basically taking yourself out of the game. You're allowing someone else to make your trading decisions for you. So there's no need to worry because that's the gap we fill. We provide you with that information and that education so that you can make your own trading decisions. I've been trading for over 4 decades now. I started my career on the floor of the Pacific Stock Exchange. And I traded roughly 16 years on the floor. 9 of those years, I was a specialist. So that's where I really gained all of my information. A specialist was just someone who made markets in roughly about 50 or 60 stocks. So even though I traded through the crash of '87 and the bull market that followed, I've been involved in just about every market environment you can think of. Any system, any strategy, any technique that's been rebranded or reformatted, I've already traded before. So I know what works in terms of consistency and I know what doesn't. So why waste your time and most especially your hard-earned money looking for the Holy Grail when really it's about educating yourself so that you can put yourself in the driver's seat. That's what we do. And you'll see today in today's presentation, as I explain what these range extensions are for you, how simple it is to really be in charge of your trading for the very first time. Now, before we begin today's presentation, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using these exit levels. But please remember that we can in no way guarantee that any of the examples I'm about to share with you will be repeated in the future. And also please remember that all these examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, as always, I'd like to invite each and every one of you to follow us on Twitter. There's our handle right there. I would suggest copying that down if you haven't gotten it already. It's an abbreviation for Specialist Trading. That's where you can find us on Twitter, and that's where I post daily information on a educational basis, anywhere from little bits of financial wisdom to actual signals that our strategies have generated and new things and things that are available on our platform. So lots of great free information. Feel free to follow us on Twitter. Okay, with that stated, remember, once again, as I said in the opening statements, we're a little bit different from other companies in that we are first and foremost an educational company. You see, it's not our goal to force feed you signals, even though our strategies and techniques generate signals. It's not our goal to force feed you these things so that you blindly take them. I mean, that goes entirely against our philosophy. Our goal is to teach you how to trade, but then provide you with tools and techniques to make that trading simple. But everyone knows, all of the members of our courses, they all know what's behind a buy and a sell signal. They all know what the rules are to a strategy. Even though we provide you with up and down signal arrows, you know in advance what they're based off of. You're not blindly taking a signal that you have no idea what to do. So our goal is not to trade for you. like the way so many other websites do or so many educational mentors do. Our goal is to teach you how to trade with the specialist edge, to put you in charge of your own trading destiny. This was the same concept that I was taught some 40 years ago when I was first struggling with my own trading by my mentors, and this is what I hope to teach to you. Hopefully, it will sustain you for 40 years as well, okay? Now, since this is going to be an educational class and we have a good crowd here today, I don't want to stop for each slide to answer any question you may have. We won't be here a really long time, but if we do answer all the questions as a slide is being presented, we'll be here far too long on your Saturday morning. I don't want to take all that time up. So please, if you have a question, which I want you to ask, but if you have a question, please wait till the end of the class to ask questions. Write them down and remember them, and I promise I'll get to each and every one of them. The only question I will answer, which has already been asked by someone on the question and answer box, is this being recorded? Yes, it is. We record all of our presentations, so if you have to leave early or if you're having technical difficulty, don't worry. We will provide each and every one of you with a link to this recording, okay? So once again, if you happen to have technical issues, many times if you just log off and then log back on again, the problems will be resolved. But once again, you will all receive a link to this recording. Okay, so as I stated, on this Saturday morning, we have a good crowd. So please, if you joined us late here, please wait till the end to ask any questions. Let's begin. Okay, so we're going to be talking about range extension levels. They're fairly prominent in the trading world, but a lot of people don't know what they are. So let's give you a brief refresher course on exactly what range extensions are. Remember, we are not just blindly giving you exit levels. We want you to understand what they're based off of. And you can start applying these as soon as Monday if you'd like, on your own. But we're going to show you how we've made it simpler for you. We've taken all the hard work out of it for you. All right, here's the definition, the standard definition of range extensions. What you want to do is measure the range of the setup bar. Now, if you're not familiar with what a setup bar is, whatever strategy, technique, or system you're trading, everything all comes together at the close usually of one bar. If it's based on news, let's say there was a great news earnings after the close, well, that's your bar telling you it's time to buy. If it's based on some pattern, when all the rules come into play and the pattern has been met, well, that's your setup bar, okay? So regardless if you're buying or selling, when all the requirements are met, that is called the setup bar. Now, what you want to do is measure the range. And when we say range, we're not talking about where it opened or where it closed. That's not what range means. Range means the actual extreme high and the extreme low of that bar, okay? That could be 10 points from top to bottom. It could be 2 points or 1 point. That is the range, okay, from the top of the candle wick to the bottom of the wick. All right. Now, what you want to do is adding or subtracting that range to the top or bottom of the setup bar equals a 200% exit level. So in other words, that is your first point of exiting. The exact same amount of range. Let's say you bought something. You just measure that range. If it comes out to be 2 points, well, then you add that on top of your setup bar. Now, if you add or subtract that range again, well, that equals the 300%. So you add it again, and that will give you the next level. Okay, now the reason why we say add or subtract, because if you're going short, if you're selling, let's say you buy a put, well, then you subtract that range from the setup bar. Now, I know this may be a little difficult right now, or it may be a little wordy and people getting confused. It'll make a lot more sense when I show you some examples right here. Let's say this is your setup bar in this generic chart. And remember, a lot of people will say, well, Steve, you're talking about daily bars, right? I don't trade. I'm an intraday trader. It makes no difference. I'm most likely an intraday trader myself. Most of my trades are intraday. So I use the same concept with my trading. So it makes no difference if this chart here is a tick chart or if it's a monthly bar. You still apply the same process. So let's say all the requirements were met on this bar. What you want to do is measure the range from top to bottom. Remember, the range is not from the open to close. For some reason, that's what a lot of people now think what the range is with the advent of a lot of candlestick trading. That's not the range. That's just the range of the body. But we're looking at extreme high to extreme low. That is what range really is. So measure that, and whatever amount of points that is, if you're going long, you simply add that, and that will give you your first exit level. All right. Now, a lot of students who like to trade really quickly, who like to get in and out really quickly and say, I just want to take a quick profit here, will use the 200% exit level or our first exit level. All right. A lot of students will also say, well, that's not a really good risk reward ratio. I'm pretty much, if I have my stop just below that bar, I'm just really making what I'm risking, and over time I really won't make anything. I've always been taught you have to have a higher risk reward ratio. Okay, so if that's the type of trader you are, remember, we're not telling you how to trade, we're just giving you this information. But if that's what you want to trade like, to have a higher risk reward ratio, well, then you simply add it again. Okay, and that's where you should be exiting then to meet your risk reward needs. So you'll basically be making twice of what you're risking. Okay, so this is how this setup occurs. And these are the standard exit levels. Now, we've added some more on our platform, but just to share with you how this concept works. And so as you can see here, well, both of these levels were met, depending on where you decided to exit. Once again, this is extremely important. As I said, where you decided to exit. This is not a system. We do not teach, nor do we trade systems at Specialist Trading and Pro Trader Strategies. We give you information so that you can decide. So someone, I'm sure, will email me and say, well, Steve, what is the best exit? Well, the best one is the one that makes you feel comfortable. There's no right or wrong exit. It's just what makes you feel comfortable. Some students swear by exiting at the first exit level. Others swear by the second. There's no right or wrong. Remember, we've all been taught to follow somebody else. But what we do at Specialist Trading is teach you how to follow your own instincts. So you've got to decide. I'm not going to sit here and tell you, no, you must always get out at 300 or always get out at 200. Now, the beauty of the range extensions is that there are literally dozens of ways to apply this. Let's say you entered and decided to get out quickly. Well, you could exit at this level. If you wanted to get a better risk reward, well, you exit here. A lot of students will say, well, listen, once we get up to 200, I'll move my stop, wherever it is, up to unchanged. And maybe I won't exit anything at all. And then when we get up to 300, I'll exit everything. Still, some students will say, well, no, once we get up to 300, then I move my stop up to 200. And that way I've locked in a profit. And then I will add an extra range extension to make 400. And then still, some students will exit little bits and pieces of the position all along the way as it goes higher. It's entirely up to you. There are a number of ways to do this. But remember, our job as your educator is to teach you these things. Your job is to paper trade and experiment and then see which technique or method works best for you. Now this can work the same way to the downside. Let's say this is the requirement bar where all the requirements are met and you have a sell signal, okay? You want to know where to exit. Well, same thing applies, but now we just reverse it. Measure the range from top to bottom, and this is your range, your 100% range. Remember, we're not measuring open to close. That doesn't make any sense. Range is extreme top to extreme low of the bar, whether it's an open, high, low, close bar, whether it's a range bar, whether it's a candle bar, it absolutely makes no difference. So you measure that range, however amount of points or pips that is. This can be applied to currency pairs. It makes no difference. And then you simply subtract it. That will give you your first exit level. If you're the type of trader that likes to get in and out quickly, you could exit or cover your short right here. If you want to stay in longer, better risk-reward ratio, you apply the same concept. So it makes no difference whether you're going long or whether you're going short. Do you see how this automatically will define your exit levels based on range? And it takes the guesswork and the discretion out where you don't have to sit there and go, okay, now I'm in. Now, I don't know where to get out or how do I figure out where a good place is. I guess I'll just let the market tell me and figure it out as I'm going along. Well, you can do that if you want, but many students, many times will stay in the trade too long. How many times have you been in a trade and you've said, wow, I've got a nice profit here. And then a few days later, you're giving it all back or maybe turned it into a loss. Well, these are fixed exits and they give you the trading plan so that you can make a decision based off this. Now, had you gone short this particular generic example, well, you would have had, once again, chances to exit on both of these levels. Remember, this is something that you can do on your own. But if you're in the heat of the moment trading and it's a fast market and very volatile the way some of the markets have been lately, you don't have time to measure when stocks are falling like crazy or the market's going straight up based off some news. You want to know that in advance. And a lot of traders like to know in advance where these levels are so that can help them to determine whether they want to take the trade or not. This is where we come into play with our new PTS Primo Charting platform. I developed this with Pro Trader Strategies to make trading simple for you so that you don't have to do the way I did some 40 years ago when I first learned these concepts and techniques and do everything by hand when I'm struggling to trade and do it by hand and make sure that I've got all the levels perfectly and make sure I add and subtract and figure out the different levels. And then many times the trade went the other way and I forgot to place my stop. You know, it gets difficult when you have to trade like that. But we've developed our platform to make it simple. We automatically generate these levels for you. It's so easy to have right in front of you, and you can know in advance or while the trade is in play where you might want to exit. Once again, our goal is to give you this information and education so that you can make the decision. So we make it simple for you so that you have it all in place. Everything is one click away. Okay, so let's look at some range extension examples. And we're going to apply one of the techniques that we have. This is a little bit more advanced technique. We call this our dynamic duo. And it's an advanced and, an expensive technique because it has that high level of consistency. But so it's not for everyone. It's more for more skilled traders. But I'll show you a great opportunity to have at the end of today's presentation to use these range extensions on a lesser strategy that has just as good examples, but it's a different format. Okay, so here's an example that we shared with you earlier in PG, okay? Now, someone looking at this would say, well, gosh, I don't have any idea, but one of our strategies actually generated a buy signal here. This is strategy number 4. Now, what we want to do is confirm it, and we use our PET-D tool, which colors the bars. Now, this confirmed it. This is the setup bar, and it's colored green on the outside by the PET-D. Once again, this is a more advanced way of trading, but just to share with you, if you're trading with our PET-D, well, a lot of times you sit there and say, well, okay, but I'm not sure I want to take this trade. I need to have at least 2-to-1 risk-reward ratio. Okay, so you click on strategy 4, click on the range extensions at the very bottom, and automatically the exit levels appear. Okay, there are the number 1 and number 2 exit levels. So now you know that the price is right there, right next to it. It's a little bit smaller on our screen right here, but on our platform you can see them pinpointed out. So you know exactly where the levels are. You can place a limit order, an open limit order, or when price gets there, you know exactly where the level is. And as we see later on, you could have exited in a few days at level 1 or at exit number 2 there. And as we've said many times, once we get up to at least level number 2, many times the momentum dissipates, and you'll see that that was a great place to exit. Let's look at another example here, an OI. Now, this was a sell order, okay? Now, all of our rules came into play using the dynamic duo, strategy 4, and the PET-D to go short here. We applied the PET-D, and the bar is red. So we have a confirmed requirement here to go short using our dynamic duo. Let's see where these exit levels would be, okay? You click on strategy 4, you click on range extensions. It doesn't get any simpler than that, and they're automatically defined with the price right below it. So you can either cover at 18.23 or 16.26. It's up to you. Remember, you're in charge. You can cover your part of your position here. You can cover all of it here. Maybe when it gets to this point, you where your stop is somewhere up here, you lower your stop to unchanged. A number of ways to trade this, but either way, you have the information in front of you, possibly before you even get into the trade. And then you can decide whether you want to take it. Now, it took a few weeks or so for exit level number 1 to be achieved, but had you waited possibly an entire month or two, there's where you see exit level 2 would have been achieved right there. Here's another example in FISV. It's a buy signal generated by strategy number 4, and we automatically furnish you with the up and down arrows when a signal has been generated, and it's outlined green by the PET-D. So this is a confirmed valid signal to go long. Let's see if you took the trade where you would exit using the exit levels. Well, they'd be right here, okay? So you can decide which one you want to take. If you're a trader that likes to get in and out quickly, well, you take the first one. If you're one that wants to go for a little bit more range in your exit levels, well, you take exit level number 2. Remember, you can use either one. You can exit a portion of your position at the first one, or exit all at the first one, or exit everything at the second, or exit a portion and add even higher ranges. We'll show you some examples with higher ranges in just a few minutes here. A sell signal in ALL, it's colored red by the PET-D. So it's confirmed to go short. Here are our exit levels. All right, very simple. All you have to do is decide whether you want to take that and decide which exit level and how you're going to trade it. You could have confirmed it with exiting here and also exiting there. You see, this is so simple. You don't have to figure this out. And someone would say, well, that's not really hard, Steve. I can do it on my own. I trade, daily bars, and I had 2 weeks to figure out what these levels were before I would have exited. Sure, but not everyone trades daily bars. Some people trade actually maybe 500 tick bar charts. Other people may trade 5-minute bars. Okay, so it's a little bit difficult in a fast market to figure out these ranges. And why have to do that? Now that you know the concept, it's already there. Our main thing is teaching you what it's based off of. We don't want you to just say, well, this is a black box exit system, and don't worry about it. We figured it out for you. All you have to do is click it on. We don't believe in that. We want you to understand why and how you're trading. Starbucks, older chart of Starbucks, a buy signal was generated here in October. As you can see, it's outlined green, so we can take the trade. And now we have our different levels. This is where you have more. We've added actually a total of 4 different extension levels. Now, when you're just beginning to use this concept, we would suggest, remember, you're in charge, but we would suggest exiting everything at level 2 or level 3. As you get a little bit more accustomed and really feel the strength of a move or have a little bit more confidence and experience in using these, you can go all the way up to 4 if you'd like. But in the beginning, we would use and say that these are the highest levels you should apply when using this. But as we see here, had you just exited at level number 1 or 2, well, that's a nice profit. But looking at the exit at level 4, look at that. I mean, there was some great news that was generated that caused this to gap higher, okay? We didn't know that. We had already generated that this was a point that you may want to get out. So this was a great trade here this past couple of months in Starbucks. Amazon has a sell signal. As you can see, the PTS has been coloring these bars red the entire time. Even though you had a nice bounce here this week, it was still coloring the bars red, telling you that the short-term trend is down. And the sell signal is colored red, so this is a valid and confirmed dynamic duo sell signal. Now, if you want to know where to get out using this technique, remember, this is just one exit technique. We have numerous exit techniques in our courses. This is just one we're providing for you that can be automatically fixed on your screen here. You would simply use these different levels here, and you can decide which one you want to take. These are what's called fixed exits because they're fixed. They're not going to change with any news event that comes out or any environmental change in the markets. They're already fixed there. So if you want to be exiting with a fixed level, then range extensions are perfect for you. As you can see, in just less than a couple of weeks, you would have already achieved covering your short down here at exit number 4. Okay? And look what happened after that. That's why we say make sure to get out of everything, especially in the beginning, at either level 3 or 4, because usually we have seen, it's not statistically proven, but just through our observance, that once you get to levels 3 or 4, usually the trend changes. So you don't want to be stuck in a trade and turn it from a profit into a loss. Now let's look at some other markets. We know that not everyone trades daily bars of the stock market. That's already assumed. So does this apply to other markets? Sure it does. Wherever there's a signal, you can generate range extensions. All right, here's an hourly bar of the E-mini futures. A strategy number 4, buy signal was generated here on an hourly chart. We add the PET-D. We're still using the dynamic duo strategy. And as we can see here, it's colored green. So this is telling you you have a valid setup bar. Now, should you want to know where you would be exiting prior to entering, you can simply click on strategy 4, click on range extensions, and you'll see first and second exit levels. And you think like, well, if you look at the chart or if you just on your analysis say, I think we can go up to these levels, either 1 or 2, well, then you may want to decide to take the trade. Okay, it's up to you, entirely up to you. Exit level number 1 was achieved the next day, and a day or 2 later, exit level number 2 was achieved. Look what happened right there. This is why we want you to make sure to first paper trade. In fact, we really require all of our students and all of our members to first paper trade with any of our techniques or studies prior to actually using real capital, because we don't want something to work out well for you and then for it to turn into a loss. I mean, we know that losses are inevitable and they're natural. They're perfectly okay. But if you can learn what works best for you prior to actually using real capital, many times you'll filter out a lot of those losses. Now, if you had just simply said, well, I get out of everything at level 3, and you didn't protect yourself, well, you would have actually lost money on this trade. But if you had learned how to use it and said, well, you know what, I've been paper trading for a while, and I see here that I want to use that technique Steve talked about, where every time we get up to a certain level, I'll move my stop up. So even if you haven't exited here at level 2, at least your stop was right here. And so you may have, at least had some nice profit there after that. Here's another example, but now in the currency pairs, a daily chart of the Canadian dollar. We have a buy signal generated using strategy number 4, and it was outlined green. So this is a valid dynamic duo setup, one of our advanced trading methods and packages here. Just to make sure where we want to exit, we automatically use the exit levels 1 and 2, and we can see here that the range extensions are already formatted for us, okay? So this is where we would get out and using on our currency pairs. It makes no difference which market, it's all based off of the range. As you can see here, exit level number 1 was achieved in just a matter of a few weeks. A few weeks later, exit level number 2 was achieved, and look what happened. So this is why we say you always want to protect yourself using this fixed exit level range extension. Okay, so let's recap before we go into questions and answers. And let me share with you a great discount we have for you today. If you're using range extensions and you just want to start using them, or if you want to just go back and look at your last trades and see how they could have helped you, remember, measure the range of the setup bar. If you don't know what a setup bar is, whatever technique, whatever strategy, whatever system you're using, I don't care what it's based off. It could be based off the full moon or the tides of the ocean. It makes no difference. But whenever you are ready to jump in and buy or jump in and sell, that usually means that all the requirements have come into play based on a certain bar. That's your setup bar. Okay, so let's say it's based off of news once again, and you get the earnings after the close, okay, and they're good in your idea, and you think the stock should rise. Well, that's your setup bar because everything came into play at the close of that bar. So you want to measure the range of that. Let's say you're buying, okay? Now you simply add that range, amount of points, amount of pips, to the top of the setup bar. That will get your equal the 200% range extension or your first exit level. If you want to get more bang for your buck, you simply add that range again. That will give you the next exit level, which is the 300% range extension. Okay. Now, if you're shorting, or if you're buying puts, if you're going in reverse to selling the market, whatever you're trading, you simply do the opposite. You measure the range and then you subtract it from the bottom of that setup bar. That will give you the range extension level. So now you know the concept, you've learned it, you totally understand it. You can start using this today on your own. In fact, I'd like to ask you a question before we conclude here. Do you think this tool could have helped your trading this past year? After we conclude today, I want you to go back and look at your last 10 or 20 trades and see if you could have gotten some better exit levels using this technique, because you can start using it right away to make sure that you could have improved your trading. Once you use it, I really think it could have helped your trading this past year. Okay? Do you think it can help your trading going forward? Well, I think the answer is yes. So let me tell you about a special offer we have for all of you for taking time out of your Saturday morning. We are going to offer you our PTS Primo Charting platform, which has the range extensions, and we're going to give you a 30-day trial for only $7, okay? You're not only going to be able to apply the range extensions automatically, but you're going to be able to use a number of other of our innovative tools that we have and proprietary tools we have on the platform. All right, here's what you're going to get in this $7 offer, okay? You're going to get our proprietary entry, exit, and trending tools that are all automatically on the platform. You're going to get our enhanced buy-sell line. We've talked about this before. I've given a number of webinars about it, where basically this is just a great color bar system that will color the screen that tells you whether you're in the buyer's zone with a buyer's bias or the seller's zone. It's a great, great tool to have, one that I often state I would if I were stranded on a desert island, this would be the only tool I use. Another short-term feature, the top-bottom 25% feature. I've talked about this in the past, which tells you the short-term direction of any market you're trading. You get a signal scanner. Okay, this is great because this is going to come into play when I talk about the strategy we're going to be offering you. Over 90 of the most prominent technical indicators, but for those of you who are not so technically biased, don't worry, we're giving you free Bloomberg TV. We have a media icon on our platform. All you have to do is click that on and the media page comes up. You're going to get live Bloomberg TV as it's being announced, any economic indicator, any economic report, any financial earnings, as they're happening. You'll see it on your screen on the media page. So a lot of traders like to have this going at the same time. And then this all comes with personalized tech support. For 30 days, if there's any issue, something you can't click on the chart or you're having difficulty, don't worry, we will be there to resolve the issues for you. Now, this is all included in the $7 offer. You're going to get all this for 30 days, but we're also throwing in an extra bonus. As I stated, we are going to give you one of our best strategies for capturing these really strong, trendy markets. And this is a perfect strategy for these particular markets. As you've seen, the markets have had these tremendous up days and down days. This works perfectly with that. This is strategy 3A. Okay, let me share with you just a few of the signals that this has generated in the last couple of weeks and show you how you could have applied the range extension exits with this. Here was a signal in ESRX, okay, a sell signal. Now, we've had a really strong move to the downside, and all of a sudden, this bar generated a sell signal. Someone could say, well, gosh, I'm not sure I would want to take that, but strategy 3A is a great strategy. We give you all the rules once again for capturing these big moves. And the strategy was projecting that there was going to be more to this move to the downside. So you could have shorted here. There are the first 3 exit levels, okay? You could have decided whether you wanted to take this trade or not. And look what happened. The market went right down to the 3rd level and then started to go higher. Had you taken the 3rd exit level, that's 15 points in just a couple of weeks to the downside. Now, how you decide to trade, if you wanted to actually use call or puts, I should say, or short the stock is entirely up to you. But this is a great strategy to the downside. What about to the upside? Well, here's an example. I'm sorry, this example is in our ESRX. The other one was in ADSK, I'm sorry. ESRX, as we can see here, generated a buy signal in the summer. And as you can see, it went up very well, very nicely in the next month, coming into mid-September. If you had generated the exit points in advance, you could have taken the 4th exit point, which would have generated a 7-point profit in just about a month or so. Not a bad trade. Now, let's say you missed that, okay? Well, in mid-September, another buy signal was generated. All right, so let's say you wanted to take that one. Coming into October here, the last month or so, a couple of months, there were the exit points generated. Had you taken the very last one, it would have given you an exit level at this level right here. In 2 or 3 weeks, there's 8 points you could have captured. And then, as you can see in October, the market started to go lower. So this is what's included in our 30-day trial. You're getting a great strategy and all these extra studies and tools and techniques included for only $7. Remember, as I often state, it's Saturday morning. A lot of people like to go out for breakfast or coffee. I can almost guarantee you, if the 2 of you go out together to get coffee, you're going to spend over $15 these days, maybe 10, but it's going to be more than 7. All right, you're going to get things that have taken me 30, 40 years to accumulate for only $7. You're going to get to apply them and use them for 30 days. This is a great, great offer along with one of our most consistent continuation strategies. That's strategy number 3A. So here's how to take advantage of this, okay? Remember, I developed the platform and a lot of these studies and techniques with Pro Trader Strategies. So contact Pro Trader Strategies. They're in charge of platform and tech support and in discounts. You can either email them at the email address right there provided or call them directly at area code 310-598-6677. Now that link below will take you to the $7 sign-up page, but it's not a live link. You're going to have to copy and paste that onto a browser. It's a lot easier. Just go to your chat box on the far right-hand corner right here on your screen of the GoToWebinar screen. You'll see in the chat box there's a live link that's just been posted for all the entire audience. All you have to do is click that on. It will take you to the $7 sign-up page. Now, if you want to talk to someone, once again, there are trading consultants manning the phones. You can call them directly at area code 310-598-6677. So that's where you'd go to talk to someone if you'd rather place your order over the phone. Now, as I promised, please ask me any question you'd like right now. We still have some time left, so I will answer any question. I'll open up the question and answer box, and I'll leave this information on the screen so that you can copy it down or copy down the number, okay? Okay, let's see. What is the difference between the red outline candle and the green outline candle? Well, the that was using, remember, as I explained at the beginning of the presentation, I'm going to be showing you these exit levels based on one of our advanced trading packages, which is called a dynamic duo. Now, the dynamic duo applies strategy, one of our strategies, strategy number 4, but it must be confirmed by using our color bar algorithm, and that is the PET-D. So when you see a bar outlined red or outlined green, that's a confirmation color bar telling you whether it's in sync with the short-term trend. So let's say you get a buy signal, and you can apply this with any strategy we have. We've just seen that it works the best with strategy number 4 in terms of consistency. But you can apply our PET-D tool. Okay, now if you get a buy signal, let's say it's even one of yours. Let's say it's based on something that you've put together. What we suggest our students to do is when they use the PET-D is to apply the PET-D, and if that bar is outlined or colored green, then the PET-D is confirming that it's okay to take the trade. It's confirming that signal, whatever it's based off of. Now, let's say you get a buy signal used on one of your strategies, and that bar is outlined red. Well, the PET-D is not confirming it. The PET-D is saying that the odds for this working out are not that high. So does it mean that it's guaranteed that that's not a bad trade? No. We're just saying that we've increased our odds for consistency with the PET-D. If you want more information about that, contact Pro Trader Strategies. There's no obligation. You can, talk to someone over the phone or ask for an introductory video that will explain it in more in detail. But it's a great, great tool that we have also. Okay. Let's see. Can you set it as investor or trader? When you say can you set it, are you talking about the range extension? I'm not sure what you mean. What can you set it? What you're talking about? Okay. How much monthly after the special intro? Okay, good question. I believe the price is, don't quote me on this, but I believe the price is less than $100. It's $97, okay? Now that's still extremely inexpensive. I've traded platforms where it's close to $500 a month. And trust me, you do not get half of the information and the techniques in those platforms that you get with our PTS Primo Charting platform. So that's still extremely inexpensive. But I would suggest try it out for a month, and then you can decide after that. But $97 per month is still tremendously inexpensive, okay? Joe asked, does this work for day trading using very small time periods? Yes, Joe, I don't know if you were here, but I stated that you can use this on any time frame, any direction, any market. I'm primarily a day trader because of my schedule and because of the webinars and answering emails. I can only really day trade. When I have a few minutes, I'll look at the markets and try and day trade. I use this same technique. So yes, it makes no difference. Wherever you have a setup, remember, as I stated at the beginning, it makes no difference when I showed that generic bar if that bar were a tick bar or a monthly bar. You simply still measure the range and then add or subtract on top of that, okay? Can we use the Primo charts for Indian securities traded on Indian exchange? Yes, you can. In fact, that's another great addition. I've talked about other webinars in the past. We have some great advances we're making. We're always adding new and different new features from different techniques to actually data. And we have a number of different markets now that you can follow, including the Indian markets as well as Canadian, as well as foreign markets, the DAX, different indices. There's lots of great information, as well as commodities. Now, we know that a lot of people, when times get really tough in the market, as they appear to may be happening, the market is on the precipice of trying to sustain itself or go down much lower. When this happens, a lot of people will get into things that are a little bit more sustainable, or things such as commodities. We have all the commodity markets. We even have commodity ETFs. So there's lots of great different information. Once again, you can contact Pro Trader Strategies for more information on data and more information on the different markets we follow. And there's no obligation. They would be happy to answer all of your questions. But just to make things as simple and as easily as possible for our members, they handle all the tech support and all the pricing and discounts. And my department is all the teaching of the strategies and the trading of the strategies, okay? So let me see here. These are all great questions. So I assume that when you said an investor versus a trader, yes, an investor is someone who looks at the long term, but it makes no difference. If you're looking at, let's say, a monthly bar, and you're trading, let's say, Facebook on a monthly bar, well, if you get a sell signal or a buy signal in Facebook, all you have to do is use the same concept. It makes no difference. It all depends on what type of bar you're looking at. So if you're looking at a bar that's a monthly bar, well, you just measure the range of the month, okay, from top to bottom. If you're looking at a tick chart, you measure the range from top to bottom. Absolutely makes no difference. Remember, we're trying to teach you to use these things, and we know there is a certain amount of work that's done on your part that needs to be done. If you want to start applying this on your own, you can start doing it. We've already taught you the concept. That's what we're a little bit different from other webinars, is that we actually teach you something at each webinar we have. We want you to learn something. But we've made it easy for you on our platform. Think how easy it is to know whether you're thinking about buying or selling something, where the exit levels would be using this fixed exit technique. It's really a great, great technique to have. It will make things simpler and easier. And this is what can help your trading so that you can be in charge of making your decisions. You've seen so many traders take themselves out of the game and they say, you know, I'm going to let somebody else do it for me. But now that you have the tips and techniques right here at your fingertips, you can make trading simple and now be in charge of your trading. Okay, so this is what we do at Specialist Trading and Pro Trader Strategies, and it's perfectly exemplified in our platform. Everything is one click away. Okay, as we conclude here, I think we're out of questions. I just want to say thank you so much for attending today. Remember, take advantage of this $7 offer. You owe it to yourself just for this past month of the year to just get on board with some of these techniques and tips that will really, in my opinion, change the way you trade. And I can't think of a better way to get you acquainted with us with such an inexpensive price. So contact Pro Trader Strategies. Once again, you can email them. I would suggest calling them if you have more questions at area code 310-598-6677. And the link you see at the bottom is in the chat box on the far right-hand corner under all entire audience. You can click that on and it will take you to the sign-up page. As we conclude here, I just want to say thank you so much for attending and taking time out of your Saturday. And I look forward to all of you becoming students of mine and members of the new PTS Primo Charting platform. Thank you so much. I'll see you next time. Bye-bye.